Stocks skidded to their biggest one-day loss in a year amid post-election concerns and worries about the coming fiscal fight in Congress. The Dow Jones Industrial Average dropped 312.95 points, or 2.4%, to 12,932.73. That handed the blue chip average its biggest one-day fall since November 9, 2011. It also sent the Dow to its lowest level since August. In large image, Associated Press, a trader on the floor of the New York Stock Exchange, looks at the front page of a newspaper on Wednesday morning, the day after President Barack Obama was re-elected. The Standard & Poor's 500 stock index gave up 33.85 points, or 2.4%, to 1,394.53, with all 10 of the sectors and 94% of the 500 stocks losing ground. The technology-oriented Nasdaq Composite declined 74.64 points, or 2.5%, to 2,937.29. The declines followed a day of broad-based gains, which many investors and traders had attributed to hopes for more political certainty after the election. But Wednesday's sell-off shattered that notion. With the two houses of Congress split between Democrats and Republicans, investors are fearful of a contentious battle over taxes and the deficit that could take the U.S. government to the brink of another crisis. Political brinkmanship on deficit reduction helped trigger a downgrade of the U.S. government's credit rating by Standard & Poor's in August 2011. This time, the concern is the fiscal cliff, scheduled tax increases and spending cuts set to take place on January 1 unless Congress reaches a compromise to avert the policy changes. The split houses of Congress, and continued partisan rancor, have fueled worries that legislators may not reach a compromise until the last minute, if at all. In a report Wednesday, Fitch Ratings said the failing to avoid the fiscal cliff would tip the U.S. economy into an avoidable recession and result in an increase in the unemployment rate to above 10% in 2013. Lawrence McDonald, former Lehman trader and author of A Colossal Failure of Common Sense, joins Markets Hub to discuss how Wall Street is likely to view a second Obama term. Photo, AFP/Getty Images. Failure to avoid the fiscal cliff and raise the debt ceiling in a timely manner, as well as securing agreement on credible deficit reduction, would likely result in a rating downgrade in 2013, Fitch said. Remarks late in the trading day by Republican House Speaker John Boehner, suggesting that he was open to compromise with the president, did little to assuage investor concerns, with stocks sinking lower after his remarks. Barry Knack, head of U.S. equity portfolio strategy at Barclays, BARC.LN -2.76%, turned more bearish after the election, arguing that the risk of a fiscal cliff disaster have increased to more than half, from about 30%. Mr. Knapp lowered his expectations for the S&P 500 to finish this year at 1325, from a previous estimate of 1395. If Mr. Romney had won, Mr. Knapp would have expected the S&P 500 to rally to 1500 by year's end. Instead, with Mr. Obama's strong victory, I see the government that grew further apart, and that might be worse than status quo. Leading the declines were financial and energy stocks, as crude oil prices tumbled and the outlook for coal darkened. ExxonMobil XOM -3.14% fell and Chevron CBX -2.58% declined, while coal stocks, weighed down by declines of 12% or more at Alpha Natural Resources ANR -12.16% and Arch Coal, ACI -12.47% were hit hard. Railroad shares, which rely heavily on coal shipments, were also weak. Financial stocks were hit hard by investor concerns about the impact of electoral wins by Elizabeth Warren in Massachusetts and Alan Grayson in Florida. Both congressional Democrats have taken the strong line on banking regulation, potentially increasing scrutiny for financial companies. Bank of America back -7.14% and JP Morgan Chase JPM -5.60% tumbled to lead the Dow laggards. Citigroup C -6.29% and Morgan Stanley MS -8.58% also dropped. Regulation is what any industry dreads the most, whether you're in coal or in the banks, said Mike Boyle, portfolio manager at Advisors Asset Management. Among hospital stocks, which were seen benefiting from an Obama victory, HCA Holdings HCA +9.44% and Tenet Healthcare EHC +9.58% rallied. Healthcare peer United Health UNH -3.78% declined. Adding to the U.S. concerns were developments in Europe, where markets erased early gains to turn lower. Concerns over the impact of the Eurozone crisis on Germany came to the fore after German industrial production for September showed a monthly decline. Separately, European Central Bank President Mario Draghi said in remarks prepared for delivery in Frankfurt that the Eurozone debt crisis is beginning to have an impact on the German economy. The Stoxx Europe 600 lost 1.3%, following the U.S. declines, while the German DAX gave up 2%. Also weighing on investor sentiment in Europe were concerns over a parliamentary vote in Greece on new austerity measures, which are needed for Greece to receive the next dose of bailout funds from international lenders. In Asia, benchmark indexes in Shanghai and Tokyo finished roughly unchanged, while Hong Kong's Hang Seng Index and Australia's SM/ASX 200 each rose 0.7%. Gold prices slipped slightly to settle at $1,713.20 each troy ounce, while crude oil prices tumbled 4.8%, to settle at $84.44 a barrel. The dollar moved higher against the euro but lost ground against the yen. Demand for treasuries gained, sending the yield on the 10-year note down to 1.632%. In corporate news, Plexus plc's negative 26.65% plunged after the electronic component supplier said it was informed that it would no longer buy the supplier to Juniper Networks, JNPR plus 1.31%, its biggest customer. Juniper rose. AT&T negative 3.34% fell after it unveiled plans to invest $14 billion over the next 3 years to expand its wireless and wireline broadband networks, in an effort to support increased customer demand for high-speed internet. At the same time, the company boosted its quarterly dividend. Sprint Nextl's negative 1.92% slipped after it agreed to buy some wireless spectrum and customers from U.S. Cellular U.S. Mail negative 12.40% for $480 million and the assumption of some debt. U.S. Cellular, which also reported the drop-off in subscriptions, fell. Damaris AMRs plus 4.25% advanced after the renewable fuels and chemicals company reported a much narrower than expected third-quarter loss and revenue that was nearly double what analysts had projected. Live Personnel PSN negative 11.38% skidded after the provider of chat services reported third-quarter earnings that matched estimates but revenue that came up short, and provided a fourth-quarter earnings and revenue outlook that were below projections. Time Warner TWX plus 4.18% gained after the media company reported third-quarter earnings that exceeded estimates while affirming its full-year earnings outlook.